Good afternoon, everyone, and thank you very much for joining us today. My name is Alina Islam, and I'm a mining analyst here at Red Cloud Securities. I'm very pleased to introduce Denarius Metals to you today. They are currently exploring and developing polymetallic mining projects in the high-grade districts of Spain and Colombia. To give you an overview of the company, as well as maybe discuss some upcoming plans, we have with us Mike Davies, CFO of the company. Once the presentation is over, we will conclude with a Q&A session, so please type your questions into the chat box and we'll get through as many as we can at the end. Before we get started, I do need to mention the fine print. For Denarius Metals, there may be some forward-looking statements made on this webinar. Please read the cautionary note on page 2 of the Denarius Metals corporate presentation located on the company's website. For Red Cloud Securities, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. We note that this webinar does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Denarius Metals specific disclosures. And with that, I'll hand it over to you, Mike. Please take it away.
Thank you to Red Cloud for hosting us, and for you viewers for joining us this afternoon for an update on Denarius Metals' story. As the slide says, we are an emerging multi-asset producer. We're in the middle right now of launching Colombia's newest gold mine at Zancudo, and we've got a number of near-term critical mineral production projects in Spain that I'll take you through today. The objective for this company is to create the next major mining company. We had recent success with our team as Gran Colombia Gold, which later became known as GCM Mining and was acquired and is now known as Aris Mining. Aris is a more than $1 billion market cap. It's a company that we started Gran Colombia in 2010 and built it up to include a significant portion of cash flow, production, and reserves. And this is what we are focused on now in Denarius, repeating that success and creating another mid-tier multi-asset producer. At the moment, we've got 4 projects in the company. Zancudo Project in Colombia, as I mentioned, which recently went into production. I'll take you through the update there. The Aguablanca Project in Spain, which we expect to have in production by mid-2026. A nickel copper producer that we're restarting, recently recognized by the EU as a strategic project under their Critical Raw Materials Act, and a project we're very excited as the operator to get back into operation. And then we've got 2 projects in our growth pipeline. The Lomero Project, a multi-metal polymetallic deposit in the Iberian Pyrite Belt, which is the largest concentration of massive sulfides in the world. It's currently going through a PEA stage, and we expect to have that in production in 2 years' time. And then the Toral Project in the north of Spain, a high-grade zinc-lead-silver project that we acquired 100% ownership of in 2024, and we're taking it through the late-stage exploration steps in order to get that one into production in 2 to 3 years' time as well. We do have an experienced management team led by our chairman, Serafino Iacono, significant mine building experience, bringing a number of projects, new projects into production in the past, as well as a history of restarting solid projects with pedigree and historic mining districts back into operation. It's been supported by our CEO, Federico Restrepo Solano, myself, our VP Exploration, Alessandro Cecchi. All of us have worked together with Serafino over the last number of years to bring several projects into fruition, and that's what we're leveraging as we do this now with Denarius. We're currently listed on Cboe Canada, trading under the symbol DMET. We're also trading on the OTCQX under the symbol DNRSF. We've got 123 million shares currently issued and outstanding, 18% of which are held by Serafino. He's been an investor in almost all of our investments that we've gone out with as private placements. One thing to note is nobody in management or the company has any cheap founder shares. We've been buying our investments alongside the other investors, so we're all in at the same cost, and we're excited with the potential and the re-rating that we expect will come with the execution of our strategy. We do have 34 million of convertible debentures outstanding at the moment, and recently received approval from the debenture holders to allow us to use shares rather than cash over the next 12 months to settle the monthly interest payments and certain of the premium payments on those debentures. The purpose of which is to maintain the cash that we're now generating through production at Zancudo inside the company, so we can continue to have some liquidity as we're building the project up, and also to have some money to start the next exploration program. So let's start with Zancudo. For some of you, maybe a bit of a refresher, but I will give you some updates in terms of how we're progressing. This is a very significant gold project historically in Colombia, one of the first mines in operation and financed the War of Independence, dates back to 1793. So our project was in the Cauca Belt, a historic mining district. A lot of large players that probably many of you are aware of, such as Gold Mining with their Titreby project next to us, as well as Zancudo sitting just about 30 kilometers southwest of Medellin. And we've got our old project, Segovia, to the top right of the screen in the Antioquia district, and the Marmato project south of Zancudo. So our team understands the Cauca Belt and the geology of the area extremely well, and we know how to operate in Colombia, which is very important to be able to bring this project back into production. We acquired the project in 2021, initially thinking we'd have a 30% interest in the project. IAMGOLD was drilling it to own 70%, but they walked away from the project in 2022 in response to their need to take their cash and use it towards their Cote project, and left us with 100% of our interest in the project. This was seen as, for what I call it, the lottery ticket winning moment. We've always had high praise for the Zancudo project, and now have an opportunity to bring it back into operation. Our claim sits on 4 titles, 4 mining concessions. They're highlighted there in the center, overlaying the topography. You can get a sense of. It's, as I said, southwest of Titreby. There's no population or artisanal mining going on in the title, so it's quite clean from that perspective. We've got a resource that we put together initially in 2022 and then finalized in 2023 using 40,000 meters of historical drilling completed by IAMGOLD and Gran Colombia. And that maiden resource has 4.1 million tons of inferred material, 6.5 grams gold, 107 grams silver, giving us 1 million ounce gold equivalent resource to get started. I'll take you forward in a few minutes to the update in terms of what's going on now with exploration, but this is a very significant resource for us as we start with this project, much more advanced than when we started with Segovia. And based on the PEA we put together in 2023, we have a 10-year mine life with this project to recover a significant amount of cash flow and production out of this project. At this point, we've started early production. We got our permits finalized at the beginning of this year, our mining permits and environmental permit. And so what we're allowed to do right now, what we are doing, is the development work in the area. Our contract miner is currently focused on opening up 3 fronts over the next 4 to 6 months. That's going to gradually get our daily production up to about 300 to 400 tons by the end of this year, and then 500 tons by the end of Q1 next year. We're currently doing artisanal mining while that's going on. The artisanal mining is anywhere from 15 to 30 tons a day that's being extracted from areas that are not infringing on the development zones. You can see on the pictures we've got there, we're crushing the material, we're putting it in bags, big bags, and then delivering it to port. We've negotiated an addendum to our long-term offtake contract with Trafigura, for which they're buying the crushed material from us, and then they're taking it and finishing the processing. We're currently getting paid about 65 to 70% of the payable gold, and about 35 to 45% on the payable silver. You can see from the very first shipment we had in June, it was only 64 tons, but it was grading 9.4 grams gold and 184.5 grams silver. And the shipments that we've now done in July are showing equally high grades, so very reassuring compared to the resource grades. It is beginning to give us some cash flow. Our Q2 revenue, while it was only 13 ounces contained in that one shipment, we realized $49,000 of revenue and $1,000 an ounce of cash margin from that shipment. The cost per ounce in Q2 is a little higher than what we expect to see long term, because we're paying a little bit more for the transportation. We're paying a little higher rate right now in the early mining to the contract miner, as they're doing more manual artisanal mining. And we're getting lower payability on gold at this moment than we expect to get when we go to full commercial production in 2026. All that to say, we had a $2,300 an ounce cash cost in Q2, and we expect that once we get into concentrate production, if we're at these gold prices, we'll probably see our cash cost just under $2,000 an ounce. We're imminently waiting for the one last permit we need to move forward with the plant construction. We're waiting on an industrial facility permit that we expect to have approved within the next 2 weeks based on our latest meetings and discussions with the local environmental authority. That will allow us to begin the pouring concrete and assembling the equipment for the plant, which is all at site in containers and ready to go. If we meet the schedule we've currently got in place with a contractor to do this work, the plant is expected to be commissioned and operating in Q1 next year, and we'll be able to start producing high-grade gold-silver concentrates that we will be selling to Trafigura under our long-term contract. Once we're selling concentrate, we should see payabilities on gold improve to about 86 to 90%, depending on grades, and we should see our payabilities on silver at around 35 to 45%, also depending on the grade. Trafigura has agreed to a prepayment financing with us of $9 million US. We've received the first $2.5 million back in February. We've got the next $2.5 million coming once we get this industrial facility permit, and then the final $4 million of proceeds once the plant installation is complete. That Trafigura facility ensures that we've got enough funds on hand to complete the construction of the plant, to begin selling concentrates, and to complete the bypass road that we're currently finishing within the title. So Zancudo for us, fully funded, and the good news is we seem to be on track to be able to have this plant operating Q1 2026. I mentioned earlier, I talked a little bit about exploration. So if you look at the map here, we've got, the gold area down the right side of that map is the location of the current inferred resource, most of that overlapping the Independencia mine. The circled area in yellow is the first area that we started drilling last year as part of our infill drilling program, about 4,800 meters. We got lots of good grade results back, giving us comfort in terms of the continuity of the previously drilled resource items. We're doing it on a 50 meter by 50 meter spacing. The intent there to infill drill so that in the next resource estimate, that we'll be putting out late third quarter, early fourth quarter this year, we will expect to see an upgrade in some of those inferred resources to the indicated category. You can see from some of the top 5 results that we got out of those drill holes, they're narrow vein, which is expected in these types of deposits in Colombia, and why we use an experienced contract miner. Some pretty significant grade intercepts with more than 20 grams per ton gold and some very significant silver grades. And this is very characteristic of the area of the Cboe Belt that this deposit's located in. Later in the year last year, we also then moved down and started to drill some holes in the Las Brisas target, which also overlaps the existing resource. And again, found a continuity of the mineralization Infill drilling was giving us confidence again in the overall resource, and getting again some very high-grade intercepts that were over narrow veins, but continuing to give us a lot of comfort in the resource we have and starting to help us as we work on these development programs for mining. The other thing that came out of that second round of drilling was the discovery of a new manto or flat-lying vein. We've called it Manto Brisis, and I circled the name there in red on the map to kind of focus on it. It's a new vein discovered in the area. This is the kind of experience we had with Segovia as well, that once we got drilling, we discovered a number of new veins at the Segovia deposit, and Zancudo's shaping up to be no different. And we continue to expect as we drill that we will hopefully have more of these kinds of discoveries going forward. We're currently looking at about another 30,000 meter drill program starting later this year and continuing on for about a year and a half. That's going to take about $6 million. And we're going to start using some of the cash flows we're getting later this year from our production to get that program going. I mentioned that we are working on a resource update. Expect to have that finalized in late September or early October. In conjunction with that, we're also working on an updated mine plan and production plan and cash flow plan so that we can update the model, the long-term model that was in the previous PEA, with more current information to help provide guidance on what to expect when the ramp up of the Zancudo asset. So with that, let's move over to Spain. A few slides to go through what we're doing in Spain. Again, as a reminder, our Corp project that we got going on in Spain is the Lomero Project. In the center of the diagram there, in the top of in the middle of the Iberian Pyrite Belt. And then in 2024, we got into the Aguablanca Project, just 100 kilometers away, and a very key acquisition for us in terms of our overall strategy. And why that is because Aguablanca comes with a 5,000 ton a day plant. As we were exploring Lomero and starting to get to the point of putting our economic studies together, the challenge of figuring out what we were going to do to process the material and where we would process the material became the part of the puzzle we needed to solve. We were introduced in late 23 to the private owners who had bought the Rio Narcia Aguablanca project from the government. And that for us became the lightning rod for advancing our strategy in Spain with our projects. With this plant, we can have a central hub, and projects such as Toral and Lomero become the spokes that can feed that hub. With 5,000 tons a day of capacity, there's enough capacity to use for the existing underground nickel mine at Aguablanca, and enough capacity for us to devote to the next stage of the development and ultimately bringing Lomero into operation. Aguablanca on its own account was a very strong operating history from 2005 through 2015, owned and operated by Lundin Mining and very profitable for many of those years. Unfortunately, in 2016, with the downturn in prices, Lundin handed the project back to the government and went in a different direction. And a few years ago, the project was sold by the government to a private group, didn't have mining experience, and that's why we ultimately came into the project. They wanted our mine building and operating experience to benefit them in terms of restarting the operations at Aguablanca. As a strategic project, we've seen some benefit already, certainly in the financing area. We're currently looking for financing to bring the project back into operation. And certainly the strategic project designation has opened an awful lot of doors for us since that announcement in May. Here you can see an overview picture of the plant, and what we announced about a week ago is that we've engaged Metso, a global firm out of Finland with the expertise to carry out the restart activities for this plant. The plant's been maintained in very good condition over the years. We don't think it's going to take a substantial investment from our early studies we've done so far. Metso is currently doing an initial phase of detailed assessment, and coming out of that phase, we'll have a detailed list of all parts that need to be replaced and any other equipment that needs to be refurbished. They're going to oversee work being done by a local Portuguese firm. They're also going to finance the refurbishment, so all the equipment and parts and things that we'll need to do in phase 2 to bring the plant back into a reconditioned state. And then in phase 3, the actual commissioning of the plant. Overall, based on the timetable we have, we believe it's about 8 months to get the plant reconditioned and commissioned into operation. In parallel, we've got to start working on the dewatering activities for getting back into the underground mine. Recently, we started working on a dewatering project focused on evaporation of water at the tailings facility. We're taking advantage of the extremely hot weather in Spain at this time to evaporate water locally using pumps and an evaporation system that was already on hand at the site. And we're currently working on getting ready to start the dewatering of the open pit, which you can see there on the left side of the screen. There is water at the bottom of the pit and the entranceway into the underground mine. The underground mine's been developed down about 5 levels and is currently mostly underwater. It's got a 2-kilometer ramp that was put together by Lundin. So the mine's already developed and ready to get going. The dewatering system's been designed, and we're working on, financing that we hope will come into fruition in September. And then in October, we can begin the formal dewatering activities of the underground mine and have that completed within about a 6-month period, such that we'll be ready to operate at Aguablanca by mid-2026 and start producing high-grade nickel-copper concentrates that we'll be selling to Aguablanca, to Medellin under a long-term offtake contract we've arranged for Aguablanca. One of the other things to point about Aguablanca and why we chose to go with Medellin in this project was not only is Aguablanca itself, given its underground mining, expected to be a low emitter of CO2, but the Harjavalta smelter that we are going to be sending the material to in Finland has the lowest CO2 footprint of all nickel smelters globally. So we saw this as a good partnership to create an overall low carbon metals producer of nickel. And just a reminder that when we did our due diligence on the project, we created a reserve estimate of 4.7 million tons, 0.67% nickel and 0.59% copper. We then put that into a PFS with an initial life of mine plan that spans 6 years, using 50% of the planned capacity of the plant, which is our goal for this phase of the operation of the plant. With the recoveries of 43 million pounds of nickel and 35 million pounds of copper, we expect to generate about $500 million worth of revenue. And at the time we did the study, and based on the prices of metals at that time, we were looking at a $4.04 per pound of nickel AISC. Since then, nickel prices have come back a little bit, just under $7. But every one of the other metals, the copper, the gold, and the platinum and palladium in particular, have risen in price. So while we might see ourselves with a nickel price at the moment just under $7, because of the strength of those byproduct credits, we're now looking at an AISC cost that is in the high $3 range. And so we've got the metal diversification of all these different metals we're going to get paid for, helping to preserve the economics of this project as we move forward. From an exploration standpoint, we've identified with our team a number of areas within the Aguablanca deposit for future exploration that we hope to get started next year once we get cash flowing. And in this diagram on the left, you can see in the charcoal ore body, charcoal area, the main ore body, which is where the 6-year mine plan has been developed. But the north ore body in green, the satellite ore body in the teal to the bottom, and in behind the main ore zone, which you can't see right now, a couple of other zones give us confidence that with exploration, we can hopefully add 3 to 4 years to the mine life of the nickel mine at Aguablanca. On Lomero, this is again a high-grade project sitting in the polymetallic area of the Iberian Pyrite Belt. It's got a rich history of production and exploration, which gave us a lot of confidence in going back in. It's got an underground mine. It's pictured here in pink on the diagram within our titles. We've got about 650 hectares of area there on the mineralized trend. That historic mine goes down about 6 levels, currently underwater. That's the site of the current geologic model that we've got a resource for. We're sitting about 10 kilometers away from the Sanfire Matza Aguatanitas project. That project's been in operation since 2009 and currently goes down about 900 meters. And then to the west, you've got the dormant San Telmo project, a former producer. So we're in the right neighborhood and on the right trend. Drilling so far, we've done about 44,000 meters, has identified a resource with almost 11 million tons, of which 7.7 million are in the indicated category. Got a copper equivalent grade on the material ranging from 1.5 to 1.9% at the based on the study done at the time, and most notably some of the highest gold grades in the belt. Our work last year in the metallurgy of this deposit focused really on looking at how we could liberate a greater proportion of the gold from the pyrite than what's typically done with companies in the belt. And we got similar results in the MET testing we were doing that Emerita got in testing that they were doing on their material and their neighboring project. The key for us is looking at roasting the material to get that gold grade recovery from typical 30 to 35% up to north of 80%. With that, the financial returns from this project significantly increase, and this is the focus of the PEA study we're currently working on and expect to have ready later at the end of the third quarter, looking at the option of what's it going to take to put a roaster in at Aguablanca, mine the material at Lomero, truck it across the 100-kilometer of road to get to Lomero, and sell not only copper and the other polymetallics that are listed in the reserve, but at the same time be able to recover a significant more revenue from gold and sulfuric acid and iron ore as new additional byproducts to mineralization. So stay tuned to our announcements when we get that PEA out. It provides a really strong indication of the potential of Lomero to become a valuable contributor to the production growth in this company. And lastly, our Toral project to the north. This is something we got into in late 22. We did some drilling in 2023. We liked what we saw, so much so that we completed an acquisition of 100% of the project last year using shares. We're finalizing some work right now on the resource update, and then later in the fourth quarter and early next year, we'll put the finishing touches on a PEA so that we can get a scoping done on the development plan for Toral to bring it into production in the next couple of years. Currently, it's got about a 20 million ton resource, 7 million of which is in the indicated. The drilling we did will move some more of that inferred up into the indicated category, but it's got some pretty strong zinc grades, and zinc market is one we think is going to continue to be strong going forward. So excited to see adding this project added to our future production profile. As I said, about 2 to 3 years out. So with that, I think, Alina, we're at the point where we could probably start the Q&A.
Thanks a lot, Mike. That was a great presentation. Just as a reminder for our audience, you can type your questions into the chat box at any time. So, Mike, we do have a couple of questions. Maybe we'll start off with Zancudo. Do you plan on releasing guidance once you have production ramped up?
Yeah, I've had a few questions from people about guidance, and we really are in an early phase. I'd say at this point, guidance is probably going to be given in conjunction with releasing the PEA. We're working with the technical advisors as they also work with our mine contractor to plot out the mine plan respecting the ramp up that's going on. Our general guidance right now that we've been talking about is geared towards having the plant in operation first quarter of next year, the development work getting us up to 500 tons a day at that point, and then by early 2027 with further development getting us up to 1,000 tons a day. The other thing that we've also said to people is 1,000 tons a day isn't the final destination for this project. Our history with Segovia is very analogous to what we're going to do here at Zancudo. In Segovia, we started with a project which had a 500 ton a day plant and no resources or reserves. And we quickly expanded the plant within a couple of years to 1,000 tons a day. And then as we built up the resources and reserves, generated more cash flow, we then moved to the next level of expansion of 1,500 tons a day. And then a few years after doing more of that, getting it up to 2,000 tons a day, which is where it was when we handed the project over to Aris Mining. And they're now taking it to 3,000 tons a day. This is how Serafino works. It's take things in digestible chunks for what the team and the company can afford to handle and afford to finance, and then continue to build the business case that you can then move to the next level. We believe with Zancudo, it hasn't been drilled enough to support going to those higher levels of production, but in time, using the cash that we're going to generate and reinvest in exploration, we're very enthused about what we see in the geology, that it has the propensity to become bigger, and that's going to be the longer term strategy. So short term guidance will come from the PEA, and then stay tuned after that.
Okay. Next question here. So once Zancudo moves to full production, what are the major risks you foresee for the operation? Will there be a change in the contract miner?
No, we've got a 5-year agreement with the contract miner, very experienced, especially in this kind of mining. We worked with the contract mining firm for about 10 years in Segovia. They're still working for Aris Mining. So they're very competent. They're well financed. They're making their own investments in the areas they're working in as well. So no need to change contract miner. I think the risk that we will face will be no different than any other mining operation in Colombia at the moment. Quite confident that with the cost structure that we have in place, we'll have strong margins. We're currently negotiating an operating contract for the plant so that we can outsource the operations of the plant and fix our rate per ton of processing, and removing some cost risk that way. And really, focusing on exploration to make this project bigger.
Okay, next question here. So you received the first advance from the prepayment facility with Trafigura. When do you expect to receive the remaining 2 advances?
Yeah, so the second advance of $2.5 million will come within a very short period of time after we get the formal approval of the industrial facility permit. So I would say that advance will probably be received at this point early September, because we do expect in the next couple of weeks we'll have news on the permit. The final $4 million advance comes once the plant is installed. So we expect that money will probably come in the fourth quarter, and we'll have that available to complete the payments we need to make on the plant, as well as the road construction and the tailings construction that's going on.
Mike, what's your view on the upcoming Colombian election in 2026?
I wish Serafino was on today for that particular reason. He's certainly far, more close to it. I guess, we're a company that learns to work regardless of who's in power. It's one of the, we've been very much a company that's worked that way over the many years we've been in Colombia. I think we are optimistic about change and what it means. Hopefully get the candidate that continues to be pro-business, pro-mining, but we'll adapt to whoever's in power to ensure we can continue the operations the way we have over the last few years.
Okay, just moving on to Aguablanca now. So it seems ambitious that you want to get another mine up and running within a year of Zancudo. So what are some of the roadblocks that could come up there?
Well, the first thing we're working on that's not fully finalized yet is financing. We don't want to get ahead of ourselves. We're the operator. We own 21%. We've been tasked as the operator on behalf of the joint venture to locate the financing. The intent is to do the financing at the project level so that it can be repaid out of the offtake contract with Boliden. and any security that the financing needs. We're looking for up to $20 million. We're in discussion with several parties at the moment, and processes for that. We expect those processes to come to fruition in September based on the current timelines that the parties have given us. So financing is really the first major thing we have to cross off the list in order to be able to have confidence that we can move forward with the time plan on the dewatering and the underground rehabilitation work that needs to happen. As I mentioned in my remarks, we've already engaged Metso. Of that 20 million cost to bring this back into operation, the plant itself, we haven't got a final estimate available on that until we get through this phase 1 review, but it could be up to about $4 or $5 million, and Metso is going to finance that. So we've got at least the plant side of it covered. But as far as risk, dewatering, that's something that we've got a firm in Andalusia that is an expert in doing that. So we're not concerned about the actual dewatering itself. We're not concerned about the plant. Our studies that we've been doing since we got involved have shown that it's in very good state. So both the plant and the underground to us seem viable. We're going to use a contract miner. We're finalizing negotiations on that. So, and the fact that there's a 5-level underground mine and a bunch of pre-blasted material already sitting at the bottom of the ramp on the first level, it's really, for us, it doesn't feel like a risky startup of an operation.
Is there an opportunity to increase your interest down the road if your balance sheet allows it?
Yes, absolutely. The partners have made it clear, and we've got right of first refusals in our arrangement that we can increase our position. Ideally, if the balance sheet allows and we can do it, we'd like to get up to at least 50% in the project.
Okay, just moving on to Lomero now. Is there a plan for a PEA there, and would it be on a standalone basis, or would you utilize the facility at Aguablanca?
Yeah, our overall strategy with respect to Lomero does tie into Aguablanca. Our agreement with the partners at Rio Narcia was very clear, and it's protected the right for us to be able to bring Lomero's material through Aguablanca. We'll have to negotiate the toll milling tariff rate when we get to that point in time, but we'll do it based on market conditions. So, we've got a destination. We will need to spend some capital at Aguablanca to add some additional systems to be able to handle the kinds of materials and produce the concentrates we expect to produce. Based on the PEA, we'd also put the roaster, if we're going to put one in, at Aguablanca. So the PEA for Lomero will be standalone in the sense that it'll cover the development cost to build the mining site at Lomero, but it will include the additional capex that we would have to put in to build the facilities that we need to add on at Aguablanca as part of it. So it's really looking at what's the incremental investment this company would have to make in both Aguablanca and Lomero to bring that asset into operation.
Is there any exploration planned at Lomero in the near term?
There is. Again, looking at our cash availability, it's probably going to be next year, where we've got a program designed. The focus of the program is going to start to get to some of the greenfield extensions of the known deposit to the east and west, as well as doing some drilling below the 400-meter level at depth, since, as I mentioned in my comments, MATS is already down 900 meters. It's not been tested really at depth, so we want to do some depth testing as well below the existing mine.
Okay, same question I asked about Lomero on the PEA. Is there one planned, and would it utilize the facility at Aguablanca?
Yeah, so we do have a PEA planned. Right now, the technical people are working on writing the final chapters of it. I'm expecting that PEA is probably going to be ready later in September for publication, once we get through our final checks and balances on it to make sure that we're comfortable we've addressed all the matters that need to be in the PEA.
Okay, just a general question here. How should investors view the Spanish assets that you have? Like, how does it fit with your Colombia strategy?
Well, I think the way we look at our company is, we're a company that's got diversification, both in jurisdiction and in metals, as an advantage in metal cycles that are going on these days. Our end game is generating cash and eventually being able to create mature operations that can then use that cash either for further reinvestment in additional projects or expansion of projects. In GCM, we got to a point where we're comfortable enough that we could start dividending out some of that free cash flow to people. So it took us a number of years till we got to that point. But as I think I said at the outset, we're looking at creating a bigger mid-tier mining company. So we see having two jurisdictions and multiple metals as a way to have diversification risk addressed and allow us to create a steady flow of free cash flow for execution of the longer term strategy.
What's your current cash position?
So we're sitting at around $3 million at the moment. We did the private placement of the life offering in June. We've got cash flow starting to come in from Zancudo. We've got, as I said, $6.5 million of cash not on the balance sheet right now that'll come in from Trafigura to complete Zancudo's work. So we're expecting cash to come in from the financing for the Aguablanca project. We will wait before we do another equity round. Hopefully see some strengthening in price before we do it. I think if we do another equity financing, it'll be a small one and it'll be up to bridge us to the point where those cash flows from Zancudo are much more solid.
Would you consider listing on another exchange outside of Canada?
That's an interesting question. I think the two biggest destinations people have asked about, obviously London and the US, maybe upgrading from the QX to something more senior. I think at this point, not going to look at adding any additional listings and exchanges. They do come with cost. We're a small company. Right now, I think what we're also hoping and waiting to see is Cboe Canada is doing some pilot testing on extending trading platform for clients to the other exchanges like London that they have available, which could open up our ability for European investors to maybe more seamlessly trade our stock. So we're expecting news on that later this year. So I think in the short term, not focusing on adding exchanges. In the long term, we'll assess that.
Okay. I think this may be the final question, but 3 reasons why investors should buy your stock.
I think like every mining company, I'd say poised for re-rating. We strongly believe, and Serafino is a key advocate, that we are worth a lot more than is showing in the market of late. It's been a bit frustrating, but execution of our strategy, I think, is key for that. We have a strategy. It's out in front of us. We have some very solid assets. We've got a good team that knows how to do this. So I'd say, re-rating, execution of the strategy, which is going to be solid, and long-term growth are probably the 3 things I would go to.
Okay, well, I think that's it for the Q&A portion of the webinar. Mike, thank you so much for taking time to host this with us today.
Great. Well, very much appreciated. And thank you all for joining.
Just as a reminder for our audience, our next webinar will feature Kootenay Silver, and that's on August 25th at 2 p.m. Eastern. Thanks for tuning in with us, everyone. Have a great day.